Picture this. While the world sleeps, massive cargo planes touch down at undisclosed locations across Russia. Their payload? Not weapons, not oil, not grain, something far more valuable in times of crisis. 5,000 tons of it, to be exact. And the kicker? Almost nobody knows about it. This isn't just another commodity purchase. This is Russia making a chess move that could reshape global economics as we know it. What they're stockpiling right now could be the difference between economic survival and collapse. And by the time you finish watching this video, you'll understand why governments around the world are scrambling to figure out their next move. The clock is ticking, and what Russia just did is about to send shockwaves through markets you didn't even know existed. Let's start with the basics, because what Russia just purchased isn't what you'd expect. We're talking about gold, pure, refined monetary gold. 5,000 tons of it acquired through a series of secret deals that took place over the last 6 months, culminating in what intelligence sources are calling the largest undisclosed precious metal transaction since the end of World War II. To put this in perspective, 5,000 tons of gold is worth approximately $300 billion at current market prices. That's more than the GDP of entire nations. That's enough gold to fill several Olympic swimming pools. That's the kind of purchase that doesn't happen by accident. But here's where it gets interesting. Russia didn't buy this gold from traditional sources. They didn't go through London, they didn't use New York markets, and they certainly didn't advertise their intentions to the World Gold Council. Instead, they orchestrated a complex web of transactions involving China, India, several Middle Eastern nations, and surprisingly, a handful of African countries rich in mineral resources. These weren't standard market purchases. These were bilateral agreements, barter deals, and in some cases, arrangements that completely bypassed the US dollar. One source close to the matter described it as financial architecture built specifically to operate in the shadows of the global monetary system. The timing of this massive acquisition tells us everything we need to know about Russia's strategic thinking. Since the invasion of Ukraine and the subsequent waves of Western sanctions, Russia has been systematically de-dollarizing its economy. They've been dumping US Treasury bonds, settling trade in rubles, yuan, and other currencies, and now accumulating physical gold at a pace that would make even the most paranoid prepper blush. Gold serves a unique purpose in their strategy. Unlike currencies that can be sanctioned, frozen, or devalued by central bank policy, gold is tangible, universally recognized, and impossible to cancel with the stroke of a pen. It's financial sovereignty in its purest form. What makes this particularly fascinating is the method of acquisition. According to leaked documents that surfaced through intelligence channels, Russia structured many of these deals as commodity swaps. They traded oil, natural gas, weapon systems, and nuclear technology for gold. In one instance, they reportedly exchanged advanced air defense systems with an unnamed Middle Eastern country for nearly 400 tons of gold bullion. In another case, they provided discounted energy contracts to an Asian nation in exchange for gold mining rights and immediate delivery of refined gold. These aren't the kinds of deals that show up in official trade statistics. These are government-to-government arrangements designed to fly under the radar of international financial monitoring systems. The implications of Russia holding this much gold cannot be overstated. First, it provides them with a massive reserve asset that's immune to Western financial sanctions. If Russia's foreign currency reserves can be frozen, their gold cannot, especially if it's stored within their borders or in friendly nations. Second, it positions Russia to potentially back their currency with gold, either partially or fully, which would be a seismic shift in global monetary policy. A gold-backed ruble would fundamentally change how international trade functions, particularly for countries looking to escape dollar dominance. Third, and perhaps most importantly, it gives Russia leverage in the ongoing global realignment between what some are calling the Western Bloc and the emerging multipolar order led by BRICS nations. Now, you might be wondering, how did this stay secret for so long? The answer lies in the fragmented nature of the global gold market. Unlike stocks or bonds that trade on centralized exchanges with transparent pricing and volume data, physical gold moves through a much murkier network. Central banks don't always disclose their gold transactions in real time. Mining companies can sell directly to governments. Refineries can process gold without revealing the ultimate buyer. And in countries where transparency isn't exactly a priority, entire supply chains can operate in complete darkness. Russia took advantage of every single one of these opacity points. They used front companies, intermediaries, and trusted partners to mask the scale of their buying program. Intelligence agencies in the West reportedly started noticing something was off about 6 months ago. Gold prices weren't behaving as expected given certain market conditions. Demand from specific regions seemed unusually high. Shipping patterns were anomalous. But putting all the pieces together took time. And by the time the full picture emerged, Russia had already secured the majority of their target amount. One analyst I spoke with described it as watching someone slowly drain a swimming pool with a teaspoon. You know something's happening, but you don't realize the scale until it's almost empty. The reaction from Western governments has been predictably concerned. Off-the-record conversations with policymakers reveal a mix of frustration and grudging admiration. Frustrated because this represents a successful evasion of the sanctions regime they've spent years constructing. Admiration because, from a purely strategic standpoint, it's a brilliant move. If Russia can convince other nations to follow their lead, if they can demonstrate that it's possible to build parallel financial systems that operate independently of Western institutions, it fundamentally undermines the leverage that the United States and European Union have wielded for decades. Sanctions only work if there's no alternative. Russia is building the alternative, and they're using gold as the foundation. What does this mean for regular people like you and me? In the short term, probably nothing dramatic. Gold prices might fluctuate. There might be some currency volatility. But in the long term, we could be witnessing the beginning of a fundamental restructuring of how global finance works. If major economies start backing their currencies with gold, if international trade increasingly happens outside the dollar system, if physical commodities become more important than financial instruments, the world our parents knew will look very different from the world our children inherit. Your savings, your investments, your purchasing power, all of these could be affected by the ripple effects of what Russia is doing right now. There's also the question of what comes next. If Russia successfully demonstrates the viability of this approach, other nations will take notice. China already has significant gold reserves and has been accumulating more. India is a massive gold consumer and producer. Saudi Arabia and other Gulf states have both the wealth and the motivation to diversify away from dollar dependence. We could see a domino effect where country after country builds up gold reserves as a hedge against financial weaponization. And if that happens, the entire architecture of global trade, lending, and monetary policy will have to be reimagined. Some economists argue this is a regression, a return to outdated monetary systems that we moved beyond for good reason. Gold standards limit monetary flexibility, they say. They constrain governments' ability to respond to crises. They create deflationary pressures that can strangle economic growth. Others counter that what we've had for the last 50 years since Nixon closed the gold window is an experiment in fiat currency that has led to massive debt accumulation, currency debasement, and financial instability. To them, a return to some form of commodity backing isn't regression, but correction. The truth, as usual, probably lies somewhere in between. What we know for certain is that Russia has made its move. 5,000 tons of gold represents conviction, strategy, and preparation for a world where the rules are different from today. Whether this gambit succeeds or fails will depend on countless variables, including energy prices, political developments, military outcomes, and the responses of other major powers. But one thing is clear. The financial battlefield just got a lot more interesting. Russia isn't playing defense anymore. They're not just trying to survive sanctions. They're actively building the infrastructure for a post-Western financial order, and they're betting that gold is the key to making it work. So the next time you hear about currency crises, sanctions, or the decline of dollar dominance, remember this moment. Remember that somewhere in the vaults across Russia and allied nations, 5,000 tons of gold sit waiting to back a currency, settle a debt, or finance a new world order. This isn't just a story about a commodity purchase. This is a story about power, sovereignty, and the future of money itself. The world just shifted, and most people don't even realize it yet. But you do. And that knowledge, that understanding of what's really happening behind the headlines, that's worth more than gold.